Welcome to the final episode of the Hot Investor Trends series. Here, you'll hear how private investors are shifting towards cash flow, certainty, and forward-looking strategies for 2025.
I've been a member here probably, I think, 5.5 years. My wife and I owned a large ATM company across the United States, a little over 8,800 ATMs that we sold in May of 2023. We sold it to the gentleman, if anybody was investing in the ATM funds. We sold to that gentleman that ended up in jail about a week ago. So he didn't finish his payout. So for us today, it's more about capital preservation. During the last, I want to say 3 or 4 years of owning and operating that ATM company, myself and my wife got heavily invested into the apartment space. We're in a little over 8,800 doors today. We seen ourselves as capital raisers and raising capital and allocating to those assets. We now see ourselves sitting on weekly meetings, managing those assets to ensure every investor that we brought into our ecosystem gets at least their money out, if not more. I know that for us over the last year and a half, we've probably put in another $1.5 million of our own money so that we didn't have to reach out and do a capital call. I've been a part of 2 capital calls in the last 3 months. One of them went off without a hitch because we had equity and we actually positioned it well. And then another one, I'm about to raise on that one in about a week or so. Because there's a ton of equity in the building, we can bring in secondary capital, and the LPs actually voted 83% for me to go outside the current investor group to find more capital because they had been squeezed on other deals because the capital had been needed for other things. My wife and I invest in gas stations. We own a lot of MHPs. I didn't know what the acronym was, but now I know mobile home parks. I knew what it was when it was a mobile home park. I didn't know it was called an MHP until today when a gentleman that is from Scottsdale, not too far from me, actually sat up here and said the exact same thing. So we own a big chunk in there. We own some self-storage. We own car washes. And over the last couple of years, since the interest rate environment went up 2,100%, if anybody's been watching that, it went up 2,100%. That's what cut all the cash flow from the apartment space. We started hard money lending, and we've been doing that for the last couple of years in Phoenix, and now we've expanded that to do it across the United States. We created a fund around that to help other investors that are in our pool that are looking for cash flow. And so for me today, I'm investing in certainty and cash flowing assets. I don't give a crap about your IRR or your cash on cash unless you can actually prove to me that it's actually going to happen. And if you come to me pitching IRR, I'm just going to laugh at you because everybody was pitching IRR 2, 3, 4 years ago. And if you look at your numbers today, none of them match up. So last night at dinner, I was chatting with a gentleman that I got into investing in the apartment space with, and he was asking me what I'm up to today, and I was talking to him about my debt fund and that we're doing hard money lending. And he goes, well, everybody invests looking backwards. So backwards looking, we're saying apartments aren't cash flowing, but I've had deals coming across my desk from a group that is buying a deal that was bought 3 years ago for $65 million. They're buying it today for the debt at $45 million. So are we still looking backwards, or should we be investing forward into where the actual cash flow and the value add apartment space is going to come from? So that's another idea that we need to start looking forward on our investing as opposed to looking at historicals, because the historical is not going to happen again. It's already been done. And the future is what we make it. So for me, I'm starting back into investing into the multifamily space again this year. I did a little bit last year. So for me, I think we hit the bottom, the interest rates are going to start to drop, and that's a great place to start taking our wealth.
I love it. And for those areas that you're looking in, are there specific regions? I know we had a list of 10 over here, but do you have certain regions you're looking in? I'm
really enjoying the Carolinas at this point in time. There's a lot of value there. I'm not seeing as much in Texas these days, even though I was involved in a portfolio where a big operator that we're a limited partner on had 18,000 units, and they sold off 5 properties to a REIT. The only one I invested in that 5 set of properties actually returned a 1.3x return in the last 3 years. So I'm happy about that, and so that's sort of where I'm at.
I love it. Well, let's give Michael a round of applause and our whole panel here. Very nice.
Thanks for listening to the Hot Investor Trends series, recorded live at a Family Office Club event. To join us at an upcoming summit, visit familyoffices.com.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.